I want to explain Section 2 of the Arizona Residential Purchase Contract, the financing portion. This section is crucial if you're not making an all-cash offer. First, let's talk about pre-qualification. When you submit an offer, you'll include an AAR pre-qualification form. This shows sellers you've spoken with a lender who's verified your financial ability to purchase the home. The most important part of Section 2 is the loan contingency. This protects you if you can't obtain loan approval. Specifically, you must receive loan approval without prior to document conditions no later than 3 days before closing. At that point, you'll either sign all loan documents or notify the seller that you've received loan approval. What happens if you can't get loan approval? If you've made a diligent and good faith effort but still can't secure financing, you can cancel the contract and receive your earnest money back. But you must provide written notice no later than 3 days before closing. It's important to understand what doesn't qualify as an unfulfilled loan contingency. If you fail to lock in your interest rate, or if you don't have the necessary down payment funds, these aren't valid reasons to cancel and get your earnest money back. Within 10 days after contract acceptance, you must provide the seller with a loan status update form. This document shows the current status of your loan application. Your lender will update this form upon request throughout the process. The contract also specifies deadlines for your loan application. Within 3 days after acceptance, you must provide your lender with basic information like your name, income, social security number, and the property address. You'll also need to grant permission to access your credit report. Within 10 days after receiving your loan estimate, you must notify your lender that you intend to proceed and provide all requested documentation. Throughout escrow, you agree to work diligently with your lender and promptly provide any additional documents they request. Section 2 also covers the type of financing you're using: conventional, FHA, VA, USDA, or other options. If you're using something other than new financing, like an assumption or seller carryback, there will be an additional addendum. Another important protection is the appraisal contingency. Your obligation to complete the purchase depends on the property appraising for at least the purchase price. If it appraises for less, you have 5 days after receiving notice to either cancel the contract or waive this contingency. Finally, the contract specifies who pays for the appraisal. Typically, the buyer pays this fee when the lender requires it, and it's non-refundable. Remember, if you make any changes to your financing terms or lender after contract acceptance, you must immediately notify the seller. You can only make changes without the seller's written consent if they don't adversely affect your ability to obtain loan approval, increase the seller's costs, or delay closing. Understanding these financing provisions helps protect your earnest money and ensures a smooth transaction. Any questions about how financing works in your purchase contract?